Hello everyone, welcome back to Nishma's Edu Launch. Today we will be discussing about accounting for not-for-profit organization. This forms a part of 12th accountancy. In this session today we will be discussing only about theory part of this chapter. So let us quickly move on to the session. First of all, let us understand what is not-for-profit organization. It is any organization that is set up in the form of trust or charitable society to provide services. So, two things you have to note here, that is, first one is it is set up in the form of trust or charitable society. So you know what is a trust, right? So trust will be managed by trustees or its members. Similarly, non-profit organization will also be managed by trustees or members, and its major motive will be to provide service to society rather than in earning profit. So the examples are schools, colleges, hospitals, clubs, etc. Now let us understand the characteristics of non-profit organization. They are set up in the form of trust. We have already seen that. And second one is service motive. So their main aim is to provide service to society rather than earning profit. Third characteristic is there is no distribution of profit. Unlike trading concerns or profit earning concerns, there is no distribution of profit taking place between the members. The profit earned will be reinvested in the business itself. This will be used for the achievement of the major objective. Each club or each organization will have a particular objective. So this profit earned will be reinvested for the purpose of achieving such objectives. Now the fourth characteristic is capital is known as capital fund or general fund. So in profit or earning organization, we call it simply capital. But in non-profit organization, we call it capital fund or general fund. Just a word fund is added to the root word. Now the last characteristic is main source of income comes from subscription. The main income is from subscription, but they also earn another income in the form of membership fee, entrance fee, interest on investments, etc. But their main source of income comes from subscription. Now the next one is difference between non-profit organization and profit earning organization. Here I have taken the major 5 differences. The first one is purpose. Non-profit organization, they are set up for non-commercial purpose. That is, there is no production and sale of goods taking place in non-profit organization. But in trading concerns like in profit earning concerns, there is of course purchase and sale of goods taking place. So, so they are set up for commercial purposes, whereas non-profit organizations are set up for non-commercial purpose. The next difference is of funds. For non-profit organization, funds come from donation, subscription, membership fee, etc. Whereas for profit earning organizations, the fund come from profit and other retained earnings. Retained earnings means what? They are the reserves set aside from profit. The main source of income comes from profit and retained earnings. Then motive. Motive, I have already told you, non-profit organization, service is the main motive, whereas for profit earning concerns, it is profit. They have the main ultimate aim of earning profit rather than providing any service. Now the fourth one is earnings. For non-profit organization, there is no word called profit and loss. They earn surplus or deficit. Surplus means it's similar to profit and deficit means it's similar to loss. So in non-profit organization, we earn surplus or we incur deficit. Alright. In a profit earning organization, we earn profit or we incur loss. That's it. That's the major difference. Then coming to the last difference, that is a system of accounting. In non-profit organization, we follow hybrid system of accounting. That means we record transactions both on cash basis and on accrual basis. Cash basis means the transactions are recorded as and when cash is being paid by you or it is being received by you. Only at that time we will record the transaction. There is no non-cash transactions recorded. That is outstanding expenses, accrued income, or in such situations you are neither receiving cash nor you're paying cash. It only becomes due. So that such due entries are not passed in cash basis, but in accrual basis you pass journal entry, or you record a transaction as and when an amount becomes due. Either you'll have to pay it or you'll have to receive it. The legal right arises there. To receive or to pay cash arises there. So that time you will record the transaction in accrual basis. But in cash basis, you only record transaction when cash is paid or cash is received by you. So in not-for-profit organization, you follow both cash system and accrual system. But in profit earning organization or trading concerns, you follow accrual system only. Okay, you record transactions as and when they become due rather than when it is paid or when it is received by you. You record it when it becomes due. That time itself you are recording it in the books of account. So these are the 5 major difference between non-profit organization and profit earning organization. I hope it's clear to you. Moving to the next slide, that is financial statements. Okay, the major financial statements of non-profit organization is receipts and payments account, which is very much similar to your cash book. Another one is income and expenditure account, which is similar to your profit and loss account. And finally, the balance sheet. Balance sheet is similar for every organization. There is no difference at all. You record the assets and liabilities in balance sheet. That is same. Now let us discuss each one of them in detail. The first one is receipts and payments account. So receipts and payments account, I told you, it is a summary of cash and bank transaction. So like your cash book, it records all the summary or all the transaction made in cash and through bank account. Similarly, receipts and payment account also shows a summary of cash and bank transactions. Now on the debit side, you have the receipt. You record all the receipts and your cash receipts and bank receipts, whatever it may be, you record all the receipts. That is the amount received by you. And on the credit side, you record all the payments made by you. Then it records amount irrespective of the period to which they pertain. That is, in receipts and payments account, especially in transactions relating to subscriptions, you can see that we may be entering the data for current year. We may be preparing financial statement for current year, but the data given may pertain to previous year and succeeding year. This happens only in the case of subscription and few other items, but that rarely occurs. Subscription, you can expect it data of previous year, current year and succeeding year will be given. You will get an understanding when we start doing the problem. So there is no year taken. There is no particular year taken with respect to receipts and payments account. Then we have record. It records both items of capital and revenue nature. That is, in receipts and payments account, there is no discrimination made between capital item and revenue item. Capital item is something whose benefit do not get exhausted within 1 year, or it lasts for more than 1 year. That is what is known as capital item. Whereas revenue items, the benefit gets exhausted within 1 year. So that is the difference, major difference between capital item and revenue item. You can also call it capital expenditure and revenue expenditure. So in receipts and payments account, there is no disparity between capital item and revenue item. Both the items are recorded here. Then non-cash items such as depreciation, outstanding expenses, accrued incomes are not recorded. Non-cash items, you know, right? Depreciation, outstanding expenses, accrued income. In these cases, you are not paying any money, or you are not receiving any money from anywhere. In the case of depreciation, what is happening in the case of depreciation? You are not paying it to anywhere, or any other institution or somewhere. You're not paying it. You're just taking some money, calculating some money, and you're keeping it aside in within your business itself. You are not paying it anywhere. Similarly, in the case of outstanding expenses, the expenses have become due. That doesn't mean that you have paid it. So there is also no cash transaction taking place, or no cash is neither coming in nor going out from the business. So there, that is a non-cash transaction. Similarly, accrued income, the income, you are supposed to receive an income, you have the legal right to receive that income, but still you have not received it. So there is also no cash is coming in. So all these are example of non-cash items. Now so these items are not recorded in receipts and payments account. Only I have already told you, we record receipts and payments account in cash basis, only cash basis. So no non-cash transactions are recorded. Now next point is, there are opening and closing balances. Similarly, in cash book, you have an opening balance which shows the cash in hand and cash at bank. Here also, receipts and payment account, we have opening balance and closing balance, which shows opening cash in hand and opening cash at bank, also closing cash in hand and closing cash at bank. Sometimes in certain questions you may receive overdraft. Overdraft means what? It is like a loan taken by you, so that if the overdraft is present in the opening balance, it will appear on the credit side, that is on the payment side. And if overdraft is coming on the closing balance, when you have a difference between the bank balance, if it is coming on the debit side, it will be overdraft. So that is about receipts and payments account. Then we have the income and expenditure account. Income and expenditure account is similar to your profit and loss account. On the debit side of the profit and loss account, which what item you record? You record expenses. Similarly, on the credit side, what you record? You record all the incomes. Like that, here also we record expenses on the debit side, and on the credit side we record all the incomes of revenue nature. Okay, so items of revenue nature are only recorded here in the sense income and expenditure account. But you must note that in receipts and payments account, you record both capital item and revenue item, but in income and expenditure account we record only revenue items. Then in income and expenditure account, there is no opening balance. Do you have an opening balance in the profit and loss account? No, you don't have that. Similarly, in the income and expenditure account also, we don't have any opening balance, but you surely have a closing balance which shows your surplus or deficit. In other sense, profit or loss. But you call it here in with respect to non-profit organization, you call it surplus or deficit. Okay, so closing balance is known as surplus earned or deficit incurred. Surplus, if it is surplus or profit, which side you will show? You will show it on the debit side. And if it is deficit, you will show it on the credit side. Just imagine if your income is greater than your expenses, you will have a surplus which will be shown on the debit side. Yeah, and if your expenses are more than the incomes, you'll have a deficit, or you will have a loss, so that will be shown on the credit side. Okay, so that is that. Now the last point is, non-cash items such as depreciation, outstanding expenses, accrued incomes are taken into consideration. So in profit and loss account, we record all these items, right? Depreciation, outstanding expenses, accrued incomes, etc. are taken into consideration in profit and loss account. Similarly, in income and expenditure account also, we take them into consideration. So income and expenditure account is prepared on accrual basis, whereas receipts and payment account is prepared on cash basis that should be quoted. Now, moving to the last financial statement, which is balance sheet. Balance sheet depicts the financial position. It shows a financial position like other organizations do. For every organization, they will possess a balance sheet which will show financial position. And in balance sheet, you record items of capital nature, that is such as capital fund, fixed assets, outstanding incomes, expenses, etc. So all these come under balance sheet. You have a liability side and you have an asset side. On liability side, you'll record capital, outstanding expenses, your creditors or subscription received in advance, etc. You record all those things in the liability side, and on the asset side you record all the fixed assets, current assets, cash in hand, cash at bank, etc. And your balance sheet will tally. So that's all for today. I hope this session was helpful for all of you. If you like my videos, please like, share it to share it to the beneficiaries, and do subscribe to my channel for more videos. Thanks for watching.